Okay, so this is the purpose and the content of each of the financial statement. So there are, when we speak of financial statements, there are 4 types of financial statements. So you have statement of income. It tells you what's your revenue, and what's your cost expenses for a period of time. And then you have a statement of changes in equity. So what is equity? So we're going to talk more about this in the future lectures, right? What is equity? So pretty much this is the kind of the company have assets and liability and equity. Okay, so the accounting. Hello. So the accounting equation, the formula one, the very popular one is the accounting equation. So the asset equals liability plus equity. Okay, so that's a very popular, very important accounting equation. Okay, so assets equals liability plus equity. So basically, if you sell your business, you pay off the debt. Whatever left is your equity. That's the one. That's the money belongs to you. We're gonna talk more about this equity. So the statement will report it. Basically how the shareholders that they are owning, right? How much the portion of the business owned by the shareholder. Okay, how that changes. So that's the statement of changes in equity. And the third one is the statement of financial position. Financial position, you can see this is like a snapshot. Okay, it just at a certain time. Okay, what do you have, right? How much asset do you have? What's your cash balance? How much money do you owe your suppliers? Okay, so basically you define a particular date. Okay, and then you report a balance of these different accounts. Okay, so now the fourth statement is the statement of cash flows. Okay, statement of cash flows. So you may have heard about this. Okay, cash is the king. If you run a business, okay, cash is probably one of the most important things, right? You need to have cash flows to run the business. So basically, this statement tells you that for that particular period of time, okay, how many cash you have collected and how did you use these cashes? Okay, where this cash spent? Okay, so those will tell you the information. So to prepare this financial statement, you start with statement of income. You're gonna learn how much money you make or you lose, and that information will feed into the statement of changes in equity. So is the shareholder in a better position or in a worse position? And then all these positions will be shown in the statement of financial position. Okay, and there is one particular account is the cash balance on the financial statement of financial position, and then you can know what's the opening balance of the cash and what's the closing balance of the cash. The difference has to be able to be explained by the statement of cash flows. Okay, so basically these are the 4 statements, and right now I'm only giving you a very brief picture of this. To understand better, we're gonna look into this more in details. Right now, just to know, have a brief idea about what are they, okay, and how to prepare them, what's the order. Okay, so for the statement of income, okay, I'm not sure how many of you have your own business. Does anyone in this room have your own business? Does any of you are working? Any of you are working part-time? Max, would you mind talk about which company you are working for and what are their revenues and what are their expenses? So anyone wants to talk about this? You may not have your own business, but you probably are working for some business, right? You can tell me what their revenue, what's the revenue of the business, what's the expenses of the business. I think this is too early of the semester. You are not in the mode of participation yet. Okay. Mike said, oh, you work for casino. Okay. So casino, what's the revenue, right? Those revenue would be the people who are buying the chips, right? Um, and then what's the expenses? Well, they have a big uh, building, right? And they hire people to work there. So probably the major expenses would be the salaries, salary expenses, right? And the revenues would be the revenue. The gamblers go there, they pay the money, right, to buy those chips. You can see that I'm not familiar with the business because I don't go to casinos. I don't have enough money to go to a casino. So then the difference between the revenue and the expenses, that would be your net income. Okay. Okay, let's take a look here. So this is one example. Okay. So you can see that this is a company. Okay, and then the name of the company, Sierra Corporation, and then the description of the statement of income, and then for which period? For the months ended October 31st, 2024. So basically, the information presented on the screen is related to this corporation for the period from October 1st to October 31st, 2024. Okay, so here, the service revenue, okay, is 20,600. And then you have a bunch of different type of expenses, salaries, 5,600, supply expenses, 1,500, rent expenses, 900, depreciation expenses, 83. So we're going to talk more in the future what this depreciation expenses means. This just recognize the wear out of the long-term asset, such as building, machines, equipment. Insurance expenses, 50, interest expenses, 25. So in total, the expenses add up to 81.58. And then the difference is the income before tax. So the difference is 442. And then you calculate how much money you have to pay to CRA, right? Corporations, they need to pay corporation tax. So then you have to calculate, you have a whole course, right, to learn how to do this for accounting students, to how to do tax. So the income tax expense is 1,800. So your net income is 10,642. Okay. So when you are preparing financial statement in future, okay, you will be asked to do so. in your exams, you have to follow this format. Okay, you have to follow this format. So learn learn the good way to prepare the financial statements, right? So there are three lines on the header, right? And then how they land up the different accounts, right? What are the major line item you need to know? Okay, so just be familiar yourself with with this example. In the future when you prepare like a statement of income, you're going to follow the same format. I'm going to pause for a second. Does anyone have any question? Okay, if you are good, give me a sum up. I can move on. So 1, 2, 3, give me a sum up. If you are good, I can move on. Okay, awesome. Thank you. Uh, if you have some other questions, not related to the lecture, please keep them until the end of the lecture, so that you can ask, okay? So now let's take a look at the statement of changes in equity, okay? So in this statement, it shows the changes. Changes means you know the opening balance, right? The beginning and the ending, right? So the ending minus the beginning, that's the changes, right? Okay, so what are the components of the shareholders' equity? Okay, so there are probably three major components for the shareholders' equity: share capital, retained earnings or deficit, other shareholders' account. So again, at this stage, I'm only going to briefly talk about this. In the future classes, we're going to learn more and more. It will be more clear. Right now, you may feel that this is all new concepts, right? Don't feel bad because this is new and you are not expected to learn all this, just from one class. Okay, so what's share capital? So share capital basically, if you need to incorporate a company, right? You probably issued, let's say, 100 shares to yourself, okay, and you pay, 1 cent for each share. So you pay $1 to the company. That's your share capital, right? So basically, that $1 is the contribution by the shareholder to the company. Okay, so those will be the common shares. Common shares gives you the ownership, but there are also the preferred shares. Those ones does not give you the ownership. We're going to talk that in the future, but there are different shares you can issue to shareholders. Okay, common shares versus preferred shares. Okay, and the return earnings. You probably understand earnings, right? Earnings like income, right? You earn income, it's called earnings. The income you earned, earnings. But you do not give all the earnings to the shareholder. Okay. So sometimes you need to keep some of those earnings for future expansion of the business, right? The business to start to be small and you want to grow the business, you need cash, you need capital, right? So when the company is earning money, you do not take all those money out, right? Sometimes you only take a little bit of money out. You keep most of the earnings in the company. Those will be called returned earnings, right? Returned earnings. If the company has a returned earnings, that is accumulation of the earnings retained over the years in the company. And the shareholders are able to receive that money by dividend declaration, okay? If it's returned deficits, that's the bad news, right? That tells me that the company doesn't make any money, right? Okay, so basically every year your net income will increase your retained earnings, and the dividend paid will reduce retained earnings. Okay? So net income will increase your retained earnings, but the dividend paid to the shareholders will reduce the retained earnings. Okay, let's take a look at the changes in the common shares, right? So you could issue new common shares, and you could buy back the common shares. So think about the public company, okay? The public company, sometimes they need to raise money for their project, right? So one way to do that is they are going to issue common shares, okay? So they are going to issue these common shares to the public investors in exchange for money, so that they can use that money for investment, okay? So in that situation, you can see the common shares is increasing, right? The number of the common shares is increasing, right? Other times, when the company have a lot of money, they don't have better use of it. So they would want to retire these common shares, okay? They want to, they want to have more ownership, right? They want to retire the common shares so that their ownership proportion will be higher, right? So in those cases, they're going to buy back those common shares from the investors in the stock market, right? Because the stock market is publicly traded, right? So anyone can go there, buy, sell, right? So common shares in the beginning, if you issue the common share, that will increase your common share. If you repurchase, okay, retired all this common share, that will decrease your common share. So then at the end of the period, you have a balance for the common shares. Changes in return earnings, okay? Return earnings at the beginning of the period, okay? You have a balance, and during the year, this net income will increase your returned earning. If you gave shareholders money in the form of dividend, so that will reduce the return earnings. So then you get return earnings end of the period. Okay? So you can see how the share capital and the return earnings can change during the period of time. Okay, so this will be one example. Again, in the future, you are required to prepare such statement. It's really important. The header, right, has 3 lines: the name of the company and the description of the statement. This is the statement of changes in equity. And for which time period? For the months ended October 31st, 2024. So what is the beginning what is the beginning of this period? Okay, the beginning of this period will be October 1st, 2024. What is the ending of this period? So that will be October 31st, 2024. Okay, so the period is 31 days. Okay, so here we can take a look at the balance as of the beginning, October 1st, common shares 0, return earning 0, total equity 0. Can anyone tell me what is going on? What did you read from this information? At the beginning, all 0, what does this tell you? So for what kind of company, your all beginning balance is 0? No common shares, no return earnings, right? Not positive, not negative, 0, and equity is 0. So what does this tell you about this company? So this is a new company, okay? as of October 1st, okay, this is a new company. And then the company during the October, they issue the common shares, right? $10,000 common shares. And then for that month, October 1st to October 31st, for that month, the income is 10,642. So out of this earning, the company decide to give $500 to the shareholder. Okay, so what is the return earning? So the return earning is 10,142. Okay, your earnings is 642, and you give 500, so it's 142 left here. Okay, yeah, does this make sense? If it makes sense, give me a sum up, and then we can move on. So let's do this together. 1, 2, 3, sum up. Okay. Okay, very good. Does anyone have any question? No? I'll move on. So now let's talk about this financial statement of financial position. Statement of financial position give you a picture of what are the stuffs for the company at a certain point of time. This is not a period of time, it's a point of time. That's the major difference, right? So if you think about the statement of income, it's for a period of time, right? It's kind of like a video, right? You watch a video for 30 minutes, right? So it's for a period of time. But if you think about the statement of financial position, it's not like a video, it's like a picture, right? You take a snapshot at a specific time point, okay? So assets, okay? So resources owned or controlled by a business. University of Lethbridge, they have science building, right? They have, different buildings. Those will be the university's assets, right? Liabilities. To build all these buildings, university probably get bank loans from the banks, right? Those money owed to the banks will be their liabilities. Shareholder equity is the difference between assets and liability. So assets minus liability equals shareholder equity. That's the accounting equation. So let's say I'm starting a business, okay? My business is about a magic bottle, okay? You had to buy it for $100, okay? And whoever drinks from that bottle will be smarter, okay? So in order to, use my bottle, you pay me $1 to drink, a bottle of water. So to start this business, my assets would be that bottle, okay? And how much it cost me? $100, okay? So I borrowed $80 from a student, okay? That's my liability. I need to pay to the student $80. And then I have $20 from my own pocket, right? So that's my equity. So to buy the asset worth $100, I borrowed $80 from the student and I contribute my own $20. So 80 plus 20 together is 100. I use that money to buy the asset. Okay, so you can see this equation, assets equals liabilities plus shareholders equity. So it's 100 equals 80 plus 20. Okay. So what are the major accounts for assets? Cash, okay? Cash, accounts receivable. So this is the money people owe you. You don't have it yet, but you know legally you can get this money back from the person. accounts receivable. Supplies, okay, supplies. So think about University of Lethbridge, right? They have tons of papers, markers, and pens, right? Papers, all these stationery supplies for UFL. Those are assets, right? Those are assets. Prepaid insurance, okay? These are the money you paid, prepaid, but you haven't used it. You can anytime ask this money back. Equipment, okay, equipment. So these accounts would be all different type of assets. So in this example, again, for financial position, 3-line item, 3-line headers, name of the company, description of the statement of financial position. This here is not a period of time. This is a specific date. So it's not for the month ended October 31st. This is on October 31st. This is the major difference for statement of financial position from the other 3 statements. Okay, only this statement of financial position is like a timestamp. All the others is for a period of time. So here, you have to be really careful. It's on a specific time point, October 31st, 2024. So you can see the total is $29,067. Now the liabilities and the shareholders' equity. So let's take a look at this liabilities. Accounts payable, this is the money you owe to the supplier, right? To do the business, you probably have to pay, let's say, a utility company, right? You use the power, electricity, gas, water, right? So those are the money you probably owe them, okay? Salary payable, right? You owe money to your employees on that date. Interest payable, right? You owe the interest, owed to the bank. Deferred revenue, this is interesting. This is something that we're gonna talk more about it, okay? But I won't talk too much here. Deferred revenue. This is the money your customer paid you, but you haven't earned. If you haven't earned, it's a liability. Bank loan payable. So your total liability here is 8,925. So what's the shareholders' equity? Common shares, 10,000. Return earnings, 10,142. Your total shareholders' equity is 20,142. The total liability in the shareholder equity is 29,67. And take a look at the total asset, 29,67, right? So assets 29,067 equals liability plus equity 29,067. So in exams, if you are required to prepare the statement, sometimes it's very frustrating because at the end of the day, you realize that my assets does not equal to my total liability and equity. So something must be wrong, right? Because if you did everything perfectly, at least these two numbers will be equal, right? Your numbers may be wrong, right? Because you are missing some points, but at least you know it's balanced, right? But many students find out it's kind of challenging because they couldn't balance it. Okay, does anyone have any question on this part? Anyone have any question? No? So give me a sum up if I can move on. 1, 2, 3, give me a sum up. Okay. What are the interest payable again? Okay, so interest payable is you get a loan from the bank, right? And you have to pay the interest to use the money from the bank, right? So interest payable is the amount of interest expenses you need to pay to the bank, but you haven't paid yet. So that's called interest payable. Basically, you owe money to the bank, right? Why you owe the money? Because that's the interest, right? You have to pay to the bank. Deferred revenue. So what's deferred revenue? So, okay, so let's say I'm a tutoring business. I teach students accounting, and you are my client, right? So, but I'm very popular, okay? I have people lined up to receive my tutoring service. So you decide to secure a position. You pay me $20,000 to have me promise you tutoring you in 2025, next year, January. So you give the money to me, okay? The $20,000, I receive it, okay? But I will not be able to tutor you until next year, 2025. First question, did I earn this revenue, right? Did I earn this income? Well, no, because I haven't delivered my service yet. I can only recognize my revenue, my income, after I delivered my service, right? So the fact that you gave me the money sitting on my account, but I haven't earned it yet, that is not my revenue, it's my liability. Because if you ask me to give that back to you, I have to, right? If you find a better instructor, right, they can teach you right away. You'll be like, hey, give me back the money, right? And then, I have to give it back to you. So that $20,000 is not my revenue, it's the deferred revenue. Only I can recognize this as a revenue after I deliver the service, which is tutoring to you, right? The fact now I have it, I recognize this as a liability, which means it's not the money belong to me. Common shares. Common shares is so basically common shares is a share capital that promise you the ownership, right? So if I buy, for example, Apple stock, right? So those would be the common shares, right? You buy a little bit, you buy some shares, give you a small percentage of ownership. So those are the common shares. Okay, common shares comes with voting right. Okay, voting right. So the company often is governed by the board of director. Okay, so who can sit on the board, right? Those are the person who make decisions for the company, right? So only when those members who own substantially amount of the percentage of ownership, those persons will be elected to sitting on the board, right? So all this we are talking about are the common shares. So those are the shares that promise you with ownership, right? Equity shares, we don't say equity shares. Yeah, there are different type of shares, common shares, preferred shares, but we don't use the term equity shares because shares capital are part of the equity. Okay, so equity has different component. One component is called share capital. Anyone else have a question? So we're gonna look into all these ones further, right? This is the first time you hear all these new terminologies. So I want you to focus mostly on the bigger picture, right? The statement, right? So we're gonna learn more about each individual account in the future, but right now you need to have a bigger picture, right? So the first statement, right? What do they look like? So that's the thing you should focus on. And you have to learn the format, right? In the future, you will be required to prepare some of the financial statements. So it's important you are comfortable, you know what the correct format is. Okay, anybody else have question? Yeah, this statement is called a balance sheet. Yeah. And the word balance is coming from that accounting equation, right? So your asset equals liability plus equity. That has to be balanced, right? Otherwise, something's wrong with your journal entry, right? So after we adopting international financial reporting standard, IFRS, so we call it statement of financial position. Prior to that, we are using Canadian GAAP. So that's when I was a student. Um, I was learning the Canadian GAAP. So that's the time we use the balance sheet as the terminology for this. But yeah, you are right. This statement is also called balance sheet. Will there be attendance today? Um, I do not count attendance. I think you all adults and you are responsible for your own learning experience. There's no point for me to forcing you to stay with me. Um, it's important you do well in these courses, right? You get a good mark, get a good GPA. Um, and I know many of you are working long hours. Okay, so I don't want to force you to be here, but I will upload my videos. Okay, I'm hoping that you are here because you have some questions you can ask me right away, right? It'll be really hard after you only watch the video, right? So statement of cash flow. Okay, statement of cash flow. So this one is the fourth statement. It explains how the cashes are generated and how the cashes are used in that operation. So we classify the company activities into three activities: operating activities, investing activities, and financing activities. So the statement of cash flow, okay, it will show the net increase or decrease in cash for the period of time. So this one, for this corporation, the title is Statement of Cash Flow for the months ended October 31st, 2024. So you can see there are three activities: operating activities, investing activities, and financing activities. Okay, so let's take a look at the first one: cash receipts from operating activity. Well, they are selling stuff, right? Revenue service, right? They're performing some service. They receive the revenue, so that's the cash, and they pay the money. Okay, so that's how much they paid. So the net cash provided by operating activity, 1,900. And then investing activity. Okay, so investing activity deals with long-term asset. So the purchase of equipment. Okay, so that cost them $5,000. Um, and then financing activities. Financing activities deals with long-term debt, long-term liability, and equity. So you can see issue of common shares. They received $10,000 cash because they issued common shares. And they borrow money from the bank. Okay, they received $5,000 from the bank. And then they pay a dividend of 500. So they gave the shareholder $500 dividend. So that used the cash. So the net cash provided by financing activities, you add them up, 14,500. So together, the net increase of cash is 11,400. The opening balance is 0 because that's the new company. And then the ending balance is 11,400. Okay. So is that true? Take a look, right? The statement of financial position tells us that the cash position is 11,400. Well, it started with 0. The company is new. And now it ended up with $11,400 cash. Where does this cash coming from? And this statement will tell me, right? So 1,900 comes from the operations, and they use $5,000 to invest into equipment. Well, it's new business. You better buy the asset, right? And then what are the other cash coming from? So it's mainly from financing. You borrowed money from the bank. You issued common shares. So that's how this 11,400 the balance is explained. Okay. So again, be careful with the format, right? So this format is what I expected you to work on in the exams, right? In exams, when I mark your statement, I will see if you have all these different lines, right? The format. Not only you want to get the good number, the correct number, you also should have the correct format, right? Any questions about the statement of cash flow? So in the later chapters, we are going to learn how to prepare statement of cash flows. For now, just be familiar yourself with what they look like, right? You don't have to, dive into these numbers, right? Understand how these numbers are worked out together. Now you just want to understand what they look like, okay, and how this statement are connected. Is tax included in the cash statement? I think yes, because that's the cash payment for operating activities. If you pay cash to CRA, so that cash payment, the tax dollars will be captured within this line, the cash payment for operating activity. Anyone else? Any other questions? Okay. Relationship between the statements. Oh, how can we classify the activities as very good question? How can we classify the activities as operating, financing, and investing? So in the later chapters, I'm going to help you with this. So basically, operating activities deals with current asset and current liability. Investing activity deals with long-term assets. Financing activity deals with long-term liability and equity. Okay, so you don't have to worry about it at this point. In the future, we're gonna learn how to do it. Okay, so that's for this one. I'm going to stop